So I finally did it. I sold my position in ULTY and moved it straight into WPAY. And today I want to break down exactly why I made that switch in the simplest way possible without complicating things with charts, percentages, or anything confusing. Just a straight, honest explanation of what changed in my thinking, what these two ETFs are doing right now, and why one of them started to make more sense for me. If you've been watching the channel for a while, you already know I've talked about ULTY before. It was one of those ETF that attracted a lot of attention because of its weekly payouts and aggressive income strategy. And for a while, it really did deliver something unique. But over time, I started to see a few trends, a few structural changes, and honestly, a shift in direction from yield max that made me pause. Not panic, just pause. And when I see something that feels like a red flag or even just a yellow flag, I like to step back and ask myself the basic question. Does this still fit the way I want to invest? Not, is this bad? Not, is this good? Just, does it still fit? And for ULTY, my answer slowly moved toward maybe not. So let's talk about what made me switch from ULTY to WPAY. The first thing has to do with what ULTY actually became over time. On its launch, it was marketed as this diversified, income-focused options ETF, built on a bunch of different growth names. And in the beginning, the structure seemed straightforward. Take a basket of stocks, sell options on them, generate weekly income, and distribute those payouts to investors. It was simple to understand. But then, as the months went on, YieldMax started adjusting a few things behind the scenes. They changed how they managed risk, added different types of options, shifted how the strategy responded to big market swings, and even made changes that affected the size of the weekly payouts. Again, nothing bad, but definitely a different style from what they started with. At the same time, ULTY's overall behavior started to change. It became more sensitive to market drops, and the weekly payouts didn't always line up with what I thought they would be. Some weeks they were bigger, some weeks they were smaller, and at times the returns weren't always consistent. And that's not necessarily the fund's fault. Options income is naturally unpredictable. But the point is, ULTY became a bit more complex than I wanted it to be. And when something becomes complex, it becomes harder for me as an investor to understand what I'm holding and what I can expect going forward. Now let's talk about what really shifted my perspective. While ULTY was becoming more complicated, Roundhill was building something new. Something that caught my attention not because of hype, but because of structure. And that ETF is WPAY. WPAY isn't just another options ETF. It's more like a bundle of Roundhill's entire weekly pay lineup. So instead of selling options on one stock or one group of companies, WPAY holds multiple weekly pay ETF inside it. And each of those ETF is designed to generate weekly income on its own. So what WPAY gives you is simple. A collection of income-focused ETF in one place. Everything is packaged together, balanced, and maintained inside a single fund. And personally, something about that simplification just felt right. I don't have to guess which company's payout will be up or down each week. I don't have to track dozens of underlying positions. I don't have to worry about how each stock behaves during market volatility. Instead, I get exposure across the full range of their weekly pay strategies, and that's where the real difference comes in. With ULT, you're essentially depending on how its selected stocks behave and how YieldMax manages the options on top of them. With WPAY, you're depending on an entire ecosystem of multiple strategies, each managed separately within Roundhill's lineup. And when things are diversified like that, in most cases the bumps get smoothed out a little. Not completely, but enough to feel a difference. Another major factor in my decision was predictability. Not in the sense of guaranteeing anything, because no ETF can guarantee returns, but predictability in terms of structure. I like understanding what something is trying to do. WPAY has one job: collect the income from multiple weekly pay strategies and send it out weekly. It stays in its lane, it's transparent, it's straightforward. And when I compared that feeling to my position in ULTY, I realized that I was spending more time checking on ULTY, looking at the holdings, looking at the options, trying to understand what was happening each week. With WPAY, I don't feel that need to monitor it constantly. It feels more relaxed, more passive, more automated, and honestly, that's the kind of investing style I personally prefer for an income-focused ETF. Another reason I made the switch is because of how the community and the issuers themselves are treating these ETFs. ULTY is still popular, but a lot of investors have questions about how its strategy will evolve, how payouts will shift, and how the underlying holdings might change over time. With WPAY, the conversation has been more about growth of the weekly pay ecosystem, expansion, innovation, and stability of the structure. People aren't asking whether WPAY will change its identity. The fund itself is built on multiple strategies, so it naturally adapts without changing its core purpose. And look, I want to be clear. I'm not saying ULTY is bad. I'm not telling anyone to sell it. I'm not telling anyone to buy WPAY either. Everyone has a different risk tolerance and a different goal. Some investors love ULTY because of the specific stocks inside it. Some people love the volatility. Some people like the payout style, and that's completely valid. ULTY still serves a purpose, and for the right investor, it can be the right fit. But for me, after watching both funds, studying how they behave, and understanding what I personally want from an income-focused ETF, WPAY made more sense. It felt more stable, more predictable, more diversified, and much easier to follow. And here's the biggest lesson in all of this. Investing isn't about being right or wrong. It's about understanding what fits your strategy today. Things change. Funds evolve. Strategies shift. And sometimes the best move is just to realign with what makes you feel comfortable and confident. For me, WPAY does that. For someone else, the answer might be completely different. And the best part, you don't need complicated math or charts to make a decision. You just need clarity. Clarity about what the ETF does, clarity about how comfortable you feel with it, and clarity about whether it matches your goals. So that's the simple version of why I sold ULTY and moved into WPAY. It wasn't because one is better or one is worse. It was because one now fits me better than the other. And as an investor, that's enough. If you want more simple breakdowns like this, or if you want me to compare WPAY with other popular weekly pay ETFs, let me know down in the comments. And of course, make sure to subscribe so you don't miss the next video. Thanks for watching Money Stick Unfiltered, and I'll see you in the next one.